Fed Day Warriors. How's everyone doing today? We have a great guest, Mark Yusko, CNBC contributor and Chief Investment Officer, strategist for Morgan Creek Capital, will join us at the top of the hour. It's going to be an interesting day with the Fed. Yesterday, when I was thinking the dollar is due for a respite, the preferred short was something not making new highs was USD CAD. I find this stop hunt candle very interesting here. Hello, Brian. Hello, Anna Kogan-Nasser. Anna, I've interviewed. She's here. So this is where pros come to monitor the market. This to me looks like a classic stop hunt. We're sitting in this rectangle, taking out the 23% level. Should take us down to between 50% back, 27.12 and 61.8 back in Canada. That's the way that's shaping up, which the dollar index starting to diverge, but momentum is just really intense. And today's low is right around this wedge line. I'd like to see the dollar index close back inside of this line, which is going to come in about 92.20. So looking forward to seeing what happens after the Fed. Okay, just getting something here. And we have this bounce in the metals, okay, which implies something could happen in the yen. Here's the yen. Unlike the dollar, the yen is at its weekly line. Here you go. So we're getting into a range where the yen, even if it's going to 110.80 or higher, is due for some type of pullback. I don't think you could get real negative until we start closing back under 108. So still a lot of real good momentum here, but the divergence on the 4-hour is pretty glaring, right? Here was your confirmed high, your first divergence, and we've been diverging all the way up here. So keep your eye out for maybe a little risk off happening into the Fed. And I do want to cover the metals here. I thought that we would take out 300 on the gold, clean out stops, but when I look at the daily candle here, this low was 1302.97, so potentially mission accomplished at 1301.88, took out this low by a buck. Still my contention that they're going to flush it under 1300. The two scenarios I'm looking for are either here at 1286 and then a quick recovery, or if you want to just be a classic technician, breakdowns under 1300 with recent highs around 1360 could take it down to 1250, 1240. Getting an even better bounce over, outperforming on this bounce, still my contention, unless we start closing over 16.5, we're going to take out this low. So those are my views right here. We're getting a pullback in Euro Pound, and Euro Pound had a great week last week. So a lot of the bears hoping that we're looking for a breakdown here. Should the Fed provide an opportunity to get long, maybe around 87.40, I'd look at that. I'd look at that at 87.40 as a possibility. And with that being said, I'm going to pass it over to Blake. I'm getting interrupted by a Skype call. Blake, do you mind taking it over?
Yeah, sure thing, Dale.
Thank you. Thank you, bro.
All right. Hey, traders. This is and you know, I guess I was listening to Dale, but he had to take a quick call. As Dale was mentioning, we do have the FOMC today, and let's talk about where we're at and some pretty key levels almost across the board. So let's first of all, let's start with the euro. So the euro has come off, off its highs. We've seen a nice pullback. One of our traders in the chat room, I think it was JT. I may be mistaken, but I believe it was JT who was interviewed here a few weeks ago, Anyway, we're hitting the 200-day moving average on the euro yesterday. We closed below it, but we have what might be minor channel support, which you know you can say it's roughly where we're currently at right now, and you know it makes sense that we're stalling here, at least ahead of the FOMC. Now with the Fed coming up today, the question is, what is the Fed going to do that is going to disrupt disrupt the dollar strength? I don't think there's anything that the Fed could do or say that's going to really change the dollar strength, unless they make some slight adjustments to their statement that might sound a little bit more dovish. We might see some sort of dollar pullback, but right now the dollar is bullish. It is a little overbought, and you know the question is, do we get a good place for re-entry in the dollar, like a rally in the euro back to 121? I think that would be sufficient for some sort of pullback in the dollar, where we could start looking to be long again or be short the euro dollar. Right? That would be optimum for me to look for a place like that. When you talk about the pound, just so you guys know, the pound has a double top, and it's actually it's in process right now. I have not sold the cable. I do want to. I tried to play it on the long side yesterday, and I got hurt because I was trying to buy it down here as we were just below this trend line, thinking that we might get a false breakdown, but it didn't. It just continued lower. So I took a loss there. But I am looking to sell rally. So if we get a rally back to 137, this might give us a better opportunity to be on the short side, something like that. Hold on really quick.
So I'm back, Blake. Sorry about that interruption.
What's that?
I'm back, Blake. I'm sorry about that interruption.
No problem. No problem, Dale. I was just talking about, you know, the dollar is strong. Yeah. But I would think it's a little overbought too. So what I'm trying to figure out is, what is the Fed going to say today that could disrupt the dollar? And now remember, today's just a statement. There's no press conference. So I'm not expecting fireworks, but maybe some slight adjustments on the statement.
What could be dovish in the statement, buddy? That inflation pressures aren't picking up, because everyone's saying it is. All the earnings reports, a lot of corporations are complaining about pass-through prices, squeezing their margins right now. So I'm wondering what they could say to be dovish that would take some of the steam out of the dollar.
Yeah, I mean, me too, and I don't really know. I don't think that anything that we're seeing really warrants too much of an altering of expectations from the Fed, with looking for multiple rate hikes going into the next year. So what I'm hoping is something that I was not expecting happens, and allows for a bounce in the euro, maybe back to 121, the pound, maybe a bounce back to 137, because we do have this double top. You take the Aussie, possible false breakdown here. I mean, the Aussie is surprisingly didn't follow through. Maybe we get a bounce back to 76.50. Maybe the Kiwi, which is at 161% extension, we have this this descending wedge that's trying to break. Maybe that shows us a reversal. There are signals here that the dollar could pull back. One of the I promised the guys and gals in the chat room I would look at the dollar yen, and I want to take a look at this pretty closely. I do have a small short in the dollar yen. It's not aggressive. I sold a little bit yesterday around these levels, so around the 109.70. So I'm sitting in. Now I'm going to take you over to the weekly chart. I'm going to revisit this weekly chart really quick. Now, I had originally drawn, you can see this triangle, right? I'd originally drawn this this trend line like this.
Right.
So we are actually above the trend line, if what I drew was correct. But I don't pretend to be right all the time, and I sure as hell am not. And I don't pretend to be able to draw my trend lines perfectly either. You know, if you take this weekly chart, okay, now let's think about this again. Here's that trend line. See all these bodies right here, not the wicks but the bodies, okay? If you just take that up just a little bit,
right,
then
right there,
yeah, and then you can see these bodies from over here, right? From when, now you have to imagine, let's forget this for a second, and let me get rid of all these fibs just to get rid of the messiness. All right, I'm gonna get rid of them.
Blake, I know you've gone on to the end, but just something I noticed yesterday, that actually the RSI structure is better in Kiwi than Aussie. Anyway, they both look okay.
Okay, we can revisit that here in a second.
Right.
But you take the dollar yen and you think about where we're at before we broke down. We hit this weekly candle here off of this trend line at first, and then we bounced, right? We bounced, we respected it for 2 weeks. Then the dollar yen broke lower. Okay, now is it possible that we are just retesting? Here, let me get rid of this and let me get rid of this. We are basically just retesting that trend line. Now I had it drawn like this, but maybe it's actually like this, and we're, you know, just testing the 110 level. Now I'm like, okay, well, I need further evidence in order to believe that's even possible. So if you go over to the daily chart and you think about this consolidation we are in, right?
Mm-hmm. That was a measured move.
Well, yeah, if you take the high here to the low here, okay.
Yeah.
We're basically at 161% extension.
Okay.
All right. So, and that's a little high. It actually is like that. So we're at 161% extension, and we basically hit it last night. It was as we hit 109, 109.93, 95 is the extension. We're pretty damn close. And if you think, okay, well, why did the dollar yen break higher? Well, it's because the dollar index broke higher. But the dollar index, if you think about it, is also stalling at previous support, current resistance, 618 retracement. So I guess the point I'm trying to make here is, I have a short in the dollar yen, and it's near current prices, as I explained just a moment ago. Now, that doesn't make me right, but I'm gonna hold it right now for the time being while we're below 110.
Look at that glaring divergence too, Blake.
Big time. There's a lot of divergence up there. And by the way, we have ADP numbers coming out shortly. You know, we have, maybe you could say it's channel resistance or close to channel resistance. But anyway, so it's just a thought, and you know, I'm going to try to hold on to the dollar yen. I don't want to even get more aggressive or even think about it until we get back below 109.50, which would be this level right here. That would trigger me into getting more aggressively short the dollar yen, but that's going to be post FOMC if I'm going to do it. Now we do have ADP coming up here momentarily. The market's looking for 198,000. That's what Bloomberg survey consensus is. So let's see what we get. Prior was 241,000. For ADP employment. So let's see how many jobs we created in the private sector. Anything less than 200,000, we got to, you know, be a little careful with the dollar, because the dollar is somewhat extended at this point. The number is 204,000, so it's a decent number. It's not a bad number. The dollars, you can see the dollar yen spiking up a little bit back into 81, 82. So decent number, not a bad number. You know, nothing revision to the revised was 228,000, which is less than 241,000. So it's a downward revision.
Yeah.
So dollars.
Someone leaned into it on that pop, buddy.
Yeah. Somebody sold in that strength. So we got a little bit of downward revision. We're seeing the dollar come back under a little bit of pressure. But again, I wouldn't be too excited about what you're seeing right now. We have to wait for ADP. I don't think that this is pretty much a non-event as far as the market is concerned. Now I was talking about some of these other currencies, like what was happening in the Aussie and the Kiwi. You had talked about the divergence. In what were you saying?
The Kiwi had a little better RSI structure when it was making new lows yesterday on the 1 and 4 hour. It wasn't confirming. See that?
Yes.
See, much more glaring than the Aussie.
Yes.
With the Aussie. So just notice that. So I think they'll both pop. I just yesterday when the Aussie was under pressure, Kiwi was holding up better. See how much deeper the RSI was in Aussie compared to Kiwi.
Yeah, that's the great observation. And also, I gotta point out that the Aussie dollar has gotten pounded, and I don't want to say this is a false breakdown yet, but this has to that's got to make anybody who's short a little nervous that we have not followed through to the downside. That doesn't mean we won't today, because there's still a lot of time left in today. We still have the FOMC, so that's something that we could actually have a blatantly bearish red candle come through today, and the next thing you know, we're trading down towards 74 cents. It's possible. I'm not saying it's not. It's just something that we've got to watch a little carefully. You mentioned the Canadian, and I'll tell you, the Canadian yesterday, I did attempt to trade the Canadian. I got out with the flat. Actually, I made my commissions. That's how flat it was. But I'm surprised, because look at the volatility yesterday. How I managed not to get chopped up in here, frankly, I'm a little surprised and impressed with my own ability not to get chopped up in here, because I think this is a recipe for account management disaster when you see this type of volatility. But I do want to point out that I'm really leaving the Canadian currency alone until once we get past. Excuse me.
That was a pretty classic stop hunt. See how they just picked off the double top stops by about 5-10 pips before reversing.
Yeah, at that 129 level. It's a big 618 retracement. And the thing is, and I know I've mentioned this before, and I'm going to mention it to you guys right now again, is once we get past NAFTA and let's, for argument's sake, let's say we renegotiate the NAFTA deal, it gets done. At that point in time, and we heard it from Polas yesterday, and he reiterated it, by the way, Dale, rates are going higher. He's just waiting, basically, for the NAFTA agreement to get completed. Once it gets completed, the Bank of Canada is going to go full on, hawkish, and that's bullish the Canadian currency. I think one of the reasons why the Canadian has been as weak as it's been is because of that. And so once the NAFTA agreement is done, is short the dollar Canadian the best trade? I don't know, because it depends a lot on what the dollar is doing, I think. But I'll tell you this much: if it's not the dollar Canadian is a good short, then it's the euro Canadian, I think, is a great short, especially after this failure up here. I think that's going to be a great short. The Canadian yen, if rates continue to go higher, the Canadian yen could be a really strong rally candidate back to the 200-day moving average and beyond. So yeah, I love the Canadian currency right now. I don't necessarily want to short the dollar Canadian because of because we're waiting for NAFTA. But once we get past NAFTA, and like I said, let's just assume that that an agreement gets done, then the Canadian currency, I think, is going to be a buy. So and like I said, if the dollar's under pressure and the euro's trading back at 122, the dollar Canadian is going to be trading down at 124, I'm sure. You know, it's just more of a, this is more of a product of what's going to happen with the dollar, or that's going to have such influence on the dollar Canadian that I'm not sure I want to trade that yet. You know, because I got to see what the dollar's doing. But the Canadian, I do like it. I think the excuse me, sorry, I got up a little early, and for some reason I just can't stop yawning today.
You know, continuation of the bull market in oil is part of the case too, don't you think?
Yeah, that can be a factor for sure, because crude oil so it's been so strong, and it continues to stay relatively well bid. Now, the Swissy, let's talk about this for a second. The Swissy has been an absolute monster. I can't believe I only made this. I can't believe that's the only profit I made in this. I had it pegged. I knew it was breaking out, and I can't believe I didn't at least make this. And I mean, look at the extension of it. Now, if
well, you know what, Blake, I was short, so you know, it's one thing not to catch the whole wave; it's another thing to be the wrong way. So I thought we were going to fail around that 97.14 area. So you know, yeah. I do that too. We beat each other up because we don't get the windfall, but at least you were on the right side.
Yeah, I guess. But man, but I'll tell you, this thing has gone so far and it's so extended. Does that mean I want to short it? Hell no. I just want to buy it, but being able to buy it on, you know, some sort of pullback, and we're just, you know, I just don't know what to do with it at this point. The dollar's in one of those situations, Dale, that it's too strong to be shorted, but it's too overextended to be bought. So it's a kind of a quagmire, if you will, when you're dealing with the dollar. It's like, okay, I don't want to short it, at least not against, you know, something like the Swissy. I don't want to short it, but the trend is so obviously bullish that you want to buy it, but it's too overbought to be bought as well. So you know, I'm hoping at this, you know, over the course of the next couple of days, we see some sort of pullback like this in the Swiss franc to give us an opportunity to reload it at a better price. And it's just a matter of being patient in currencies like this. But it is gone, and it's exceeded my expectations on where I thought it was going to go. That's for sure. The U.S. dollar Mexican peso is just kind of chopping around. The U.S. dollar Norwegian krona is almost at the 618 retracement, and I know Stelios is putting on a pattern in play for a possible short, as he is very bullish the Norwegian currency. A lot of that has to do with you know, the macroeconomic backdrop of Norway, but also, you know, crude oil as well, and that he can talk about that, I'm sure. The U.S. dollar Swedish krona, I shorted that yesterday, got out for like basically a break even. I shorted it as we were, you know, around the 618, just a little bit of above the 618 yesterday, and it's really kind of stalled. I played this thing on the long side a couple of different times last week and made really good money. I tried fading it, like I said, unsuccessfully yesterday, and it's just, it's holding really well here. We did manage to make a new brief high overnight, which may allow, you know, if the dollar does pull back, may allow for a little bit of a pullback, but I think you got to look at these pullbacks as opportunities to be on the long side if you can get it. And that's, you know, that's the name of the game today, is really just trying to stay patient, waiting for a dollar pullback. And then for me, I am looking at the dollar yen. Oh, one other thing regarding the dollar yen, because if you came in a little bit late, I am, you know, wondering if this weekly trend line is, capping the advance. One of the things that will get me really bullish or bearish the dollar Canadian, or get me really bearish the dollar yen, is the bond market and also gold as well. So let's talk about the bond market first of all. The bond market is bearish, and we have not been able to muster any type of rally. But what I am looking for in the bond market, and this is not the ZN, this is an interpretation of the 10-year. So if you actually go to the 10-year, it looks something like this. I want to see a break above these highs because I know the market is aggressively short the bond market. Okay, and as yields are near 3%, everybody's short the 10-year. And if we get a squeeze in the 10-year, we break above this resistance. That means that bonds are going higher, yields are coming down, and if yields are coming down, the dollar yen is a yield story. It's not an equity market story. It's a yield story. So if we really have to see bonds do this. And once they break higher, if they break higher, I shouldn't say once, if they break higher, that's going to be the signal to me that I need to start really aggressively selling the dollar yen. Also, flip side to that is what we talked about in gold and silver. Silver is bouncing off of this trend line support that we identified yesterday. If you use ForexAnalytix, okay, yesterday's analysis, here's the 4-hour, silver bears need to be careful. We may have had a false breakdown and are bouncing from minor trend line. End of the day analysis, silver ended up respecting the trend line and possibly posting a false breakdown. However, tomorrow's FOMC will determine if we break lower or bounce from the support. And as you can see, we have bounced pretty aggressively, but this is one of those situations that if silver bounces and gold also held the 200-day moving average, we held the bottom of the support zone. If gold bounces today, that is another indication that the dollar yen is probably ready to turn lower, as they have a very strong inverse relationship. So those are the things that I'm paying very close attention to regarding the dollar yen over the course of the next few hours as the FOMC is ready to release its statement. So I'm going to pass it over to Steve. It sounds like Steve and Stelios are here today, and you have a great interview today, right, Dale?
Yeah, Mark Yusko.
Awesome.
So looking forward to talking to Mark, and also what a doubleheader tomorrow with Jim Rickards. I'm going to ask him who's winning the currency war.
Man, that's going to be an awesome interview. Both of these, the next 2 days. So you guys are in for some real treats, because remember, first of all, these webinars are free to you guys. The interviews are free. Dale works really hard to put these together, and they're offered to you guys free of charge. These are guys and gals that are superstars in the financial community that are on CNBC, that you get more than a 2-minute snippet with them. You get to actually ask them questions. Dale asks questions and really dives deep into the topic that they're discussing. So I hope you guys listen in. I'm interested to hear what Mark has to say today. I have seen him on CNBC, so it's going to be interesting to get his point of view, especially about cryptocurrencies. And then tomorrow, Jim Rickards. I mean, there's not much more to be said about that. So Steve, good morning.
Good morning, Blake. How are you? You
I'm
sound
good.
tired for sure.
I cannot stop yawning. It's one of those days that I just apparently my brain needs more oxygen, so I just keep yawning. But everything's good. We have obviously a busy day today, so
For sure. Although it might be quite not busy until the Fed. I mean, I think that we might just hover around current levels until then. Huh?
Yeah, I think so too. I think it's going to be kind of quiet. So, so anyway, I'm gonna pass it over to you guys. You guys have a great next half an hour, and then I'll look forward to the interview, Dale.
Okay, buddy. Have
All
a
right.
good
Thanks.
hunting, Blake.
Thanks, everybody.
Mark is a great guest. Yeah, I really enjoy listening
I'm
to
gonna-
him. And
I'll
yeah,
grill
go
him
ahead.
on Bitcoin for you, Steve.
No, it's, I mean, Mark, people might misunderstand. Mark has been in finance, many decades before they even invented Bitcoin. So, he has a very thorough understanding of the financial markets. I think it would be a mistake if we just focus on cryptocurrencies. I know that, it's very interesting that he's quite bullish on the future of cryptocurrencies, but Mark can talk about everything.
Oh,
And
yeah.
I think I would also want to hear his opinion on what he thinks will happen from this point on with dollars and the bond. I mean,
It'll all be covered.
I can say one thing for sure, for people that don't follow him or for people that don't know his work. I remember Mark was one of the first people at the very, very, very beginning of 2017 that was extremely bearish the dollar. And he was adamant about it. I mean, he was not trying to be, to play both sides of the coin. He was saying that, a king dollar is over, and the dollar is going to be very bearish, and he wasn't even holding back. So he had conviction, and he obviously proved to be right. I mean, we all saw the move of the dollar that started in 2017, and where dollar is at the moment. Speaking about the dollar.
Great time to talk to him with this recovery in the dollar. My guess is he'll call it a bear market rally, but I will ask him about it.
Yeah, and this is my opinion as well, that we might get a bear market rally. We've already blown through 3 areas of resistance, but we're currently testing. And it's not an accident. We very often see ahead of big announcements, because let's be honest, the dollar is currently waiting for the Fed to give it the go ahead to resume higher. If it is to resume higher, we would need to see the Fed being more hawkish than the market expects, or at least as expected, let's say, because we already have a move that has started happening, but not by accident. We're currently testing the 61.8 of the last move lower. It's also, if I zoom out, you can see that this area has been a very strong horizontal support area in the past, and why not? This time it can play out to be a very good resistance. So if we get a reaction from here, it's all going to be about what kind of a move lower we're going to get. If we just come back to retest this broken descending trend line, in a corrective manner, then I'm going to be bullish for at least one more leg higher for the dollar. But if we do get a rejection from here, and we see some acceleration to the downside, I'm not going to change my thesis that this might just be a little correction, as we move to the downside. So very critical level. I think that if we actually manage to close above this 92.60 area, the dollar's rebound can extend quite higher from here. I wouldn't even rule out, a 96, 96.50 level, since the market is going to be definitely getting squeezed, especially above these levels. I believe, plenty of stops must be lying, somewhere there. So I do think that we are at a critical level just ahead of the Fed's decision. Now, having to do with the USD yen, I know that Blake showed it. I'm 100% with him. I mean, you can redraw a little bit this ascending trend line. What matters is we have the 200 DMA just a little bit higher from here. What matters is what happens from here. In any case, a move lower somewhere from here is a very likely scenario. The question is, what kind of a move is that going to be? And this is what's going to help us determine if this is going to be a correction and then a resumption to the upside, or if that was the corrective move and more downside is coming. So USD yen, any pullback towards 108, and it's all going to be about the structure. So for us to determine what's happening.
Well, how about this first wave, Steve? Would you call it impulsive? I mean, it really did accelerate the last week or so. Was that impulsive in your view? The end.
Depends, because don't forget that even corrective moves have impulsive waves. So, for example, a very simple ABC, either A or C can be a 5-wave structure, right?
Okay.
So seeing in the short term little impulsive moves within corrective moves is something that is extremely common, right? So depends on the time frame you're asking. For example, let me give you a very relevant example. Let's have a look at the pound yen. The pound yen, this move, let me mark it. This move here looks impulsive, right? This leg higher. And yet you see what happened from there, right? We got rejected below the 78.6. We broke below this channel. And, all that matters for me is that this move was impulsive in nature. So at the very least, in my opinion, this remains likely to be an A, this to be a B at the very least, and then at least one more move to the downside. So, this also, points to what I'm telling
Got
you.
it.
Speaking about the pound yen, it's important to see what's going to happen from here. It has already broken below the ascending channel. It has already broken below this little horizontal support resistance area. Currently testing the 200 EMA. It's making a little attempt to rebound from here. The same thing is happening from the euro yen. I actually booked while Blake was speaking, I actually booked two positions, half of them actually. I booked half of my euro yen short for less than 60 pips of profit, roughly 55 pips of profit, because I don't like the fact that it's not seeing follow through while it's testing, important support. So, I'm keeping just half of it, and the other one I booked simply because we're ahead of the Fed. Was my USD ruble, half of my USD ruble long for 3.78% of profit. I think this was a textbook move after a central bank intervention, and I do think that there is a good potential for a resumption to the upside, even towards 67. But ahead of the Fed, I'm closing up half of my position, and I might add again back to it once this event risk is out of the way. Now, as we were saying yesterday, confluence of supports is holding the Kiwi for now. Aussie is also barely holding the 75 area, which, as we said, is the line in the sand. So plenty of currency pairs. Euro USD is toying around with the 200 DMA. Blake showed that depends on how you decide to draw this. If you decide to draw it as a channel, it's going to be something like this. And if you draw it like this, more or less, we might end up closing above support. For me, I said it yesterday as well, this 1936 area is a key area. It's also the 61.8. It was this low, it was that high. So, many, let me also show the cable. Cable has found support. There it is. Cable has found support at this horizontal area that has acted twice as resistance, and it's rebounding from here. Let me make it clear. I am looking for opportunities to be short the cable, either from a rebound to 138 or even higher to 139. I think that at least one more leg lower for the cable is extremely likely. Bottom line, many instruments are currently at support resistance. Let's not forget to show the metals. Blake briefly showed, if I remember right, silver. But let me show you the big picture. Silver almost came down to retest this long-term ascending trend line. You can call it a triangle support trend line. It definitely tested this horizontal support area. It's rebounding from there. Gold is also rebounding from a. Gold is also.
It's doing the lag thing again, Steve, unfortunately.
Rebounding from a very strong horizontal support. Stelio?
We can hear you now. It did the lagging thing again, unfortunately, for about 15-20 seconds.
Okay.
But keep going. We can hear you
I understand that. Okay. So two more factors out of the. Yeah, I know. Okay, so until which point could you hear me, Stelio? Shall I take it from there?
You started talking. You were still talking about silver, so you hadn't switched to gold.
Okay. Okay. So I was saying that silver, got rebounded from this horizontal support area, and it almost reached once again this ascending trend line support. And gold, on the other hand, found support at a triple confluence of supports. Which ones we're talking about? It's the 200 daily moving average. It's the 50% fib of this move higher. It's also this horizontal area of support resistance. You can see how important it is. So just before the Fed, gold is also sitting on a very, very critical key level. So many instruments are testing important levels ahead of the Fed. In all honesty, from what I'm seeing here, I wouldn't be surprised if I saw at least an initial reaction of weakness for the dollar following the Fed. Now, of course, what is important is if we're going to see some type of a follow-through, right? And that's what's going to matter. Usually, I don't like to trade immediately following some event risk, and because we've seen how often the first move can end up being a fake one. So I'm going to wait for the reaction and then wait to see if there's going to be a reaction to the reaction. I'm going to wait for daily closes, before I decide if I'm going to add back to my positions or take some fresh positions. Now, at the same time, unsurprisingly, stocks are also consolidating. I mean, the S&P, for example, is more or less in the middle of this tightening formation. This triangle has now narrowed down to having a range of roughly 100 points. I do think that following the Fed, it might find the required direction to at least produce, a breakout either to the upside or to the downside. I have to remind here that even if it breaks to the downside, it's not going to make it outright bearish, because simply we can interpret this as a formation that is missing one more leg to the downside without being a real reversal from the high. I mean, it can still end up being a corrective move to the downside, even if it breaks lower. Okay. If it breaks higher, though, especially if we see a daily close above, let's say 2710, I think that there is a good chance that this will signal that the correction is over, and we might even push to new highs from there. Obviously, as we've seen plenty of times, the 200 daily moving average is extremely important. If we see a decisive close below it, we should at least see some extension to the downside. 2480 in this case would be my first target, and 2400 would be my second one. Okay. Since I didn't have time to take any questions yesterday, let me pause here and see if we have some questions. Stelio, are you still with us?
I am still here, my friend.
Okay, yes. Please let me know if my voice goes down again, yes, or you can use. Okay, perfect.
Will do.
We have a question for the DAX. Let's have a look at it. Here it is. If you remember, I was quite clear with the DAX. I said that the rebound from this confluence of supports was indicating to me that another retest of this 50 fib and the 200 daily moving average is not going to hold once again. And I expect this to break for the 12,900 area to be tested. It seems that this move is underway. I do think that there is nothing really stopping it until there. And for me, it's going to be, this is a critical area of resistances. If we get rejected from 12,900, fine. I would be looking for at least a move down towards 12,400, and depends on what happens from there, why not even higher? If we directly breach that area, I would be looking for the same area to act as support following that. Okay, so we're on our way to 12,900. I think all eyes should be on that. FTSE, I had made very clear that the break above there should lead FTSE to retest this area that that is a horizontal has acted as a horizontal resistance at least 3 times in the near past. The 78.6 is also there. We reached that today. We seem to be getting rejected initially from there. I think that, given the fact that this move has unfolded from 6,850 and moved like straight up to almost 7,600, I think that at least a pullback to 7,400 is a very healthy pullback. This was a V-shaped recovery, a very, very strong move to the upside. It probably needs to cool off for a little bit, but definitely, you can't rule out that there is going to be continuation after a few days of a correction. So I think FTSE looks good. If we come down and retest the 7,400 area and it holds, I think that it's still a good candidate to be long. Another one is the Nikkei. Nikkei is grinding higher slowly, approaching the 61.8. It was also that low there. I would be careful with this area. I wouldn't be surprised if this produced at least some pullback towards the 22,000, 21,000, 21,900. So definitely not the place to establish long positions. If we do see a pullback and the pullback is in nature, actually it's the same thing I said about the USD yen, which I said that I'm expecting a pullback in the USD yen quite soon. And from the nature of that pullback, I will determine if there is more upside left or we might be resuming to the downside. I think the same situation with Nikkei. We will know quite soon. Within the next few days, we need a little bit more of price action. Okay. Nifty. Okay, let's have a look at the Nifty. And let me read the whole question, actually, since we're talking about it. Is the Nifty looking bullish, or would you see confirmation? After a break above this horizontal area of resistance, I think it's bullish. Today's candle is a nasty one, but that doesn't say necessarily much because, it has made quite a strong move. So I think a healthy pullback towards the 10,600 area or even the 10,400 area, like here, can find more buyers. Okay. So I think it looks decent to the upside. Let me see more questions. CAD Swiss. Yeah, let's have a look at the CAD Swiss. Here it is. We haven't had a look at it in some time now. Let me extend this horizontal area of support resistance. You can see this pair has been extremely nasty. In essence, we were monitoring this as a potential inverted head and shoulders formation. This never manifested because we broke above, but we never saw continuation. So what remains to be seen now is this some kind of a channel? Is it a triangle? Not really sure, but I can tell you one thing for sure. As you see in the long term, it's directionless, right? We've spent so much time oscillating between those lines.
I would say that the formation actually has a bullish bias. It's a ascending triangle. They happen at market bottoms, just like descending triangles happen at market tops. But of course, you need the breakout to confirm it. And you get
yes.
The target would be the measurement of the triangle above the breakout.
You're absolutely right. But on the other hand, I cannot dismiss the fact, Dale, that look at this move. I mean, this pair was in 2010 at 111, right? And it depreciated to almost half of that. So even a prolonged consolidation is the very least you should be seeing in such a strong move to the downside. So I would really not be surprised if this got resolved to the downside. Right?
Could be.
I wouldn't be surprised at all. But
I expect everything and anything.
Yeah, but let's be clear about something. For this to happen, we would definitely need to see the Canadian dollar weaken, but we would also need to see once again the Swiss franc weakening. My take out of this is that probably we would also need to get ourselves back in a risk-off environment for this to get resolved to the downside. Is that impossible to happen within some months from now? No, absolutely not. Absolutely not. But I would favor more a continuation to the downside if we ended up getting ourselves back in a risk-off environment.
Okay, if we do break out to the upside, and you talked about that massive decline, even a measured move would only take it maybe back to the 50% level.
Absolutely,
right?
It would still be a huge move. Yeah,
right.
Absolutely. Yeah. But definitely, we know which areas to monitor here, right? I mean, this has been a clear area of resistance. You can see 1, 2, 3, depends on if you ignore that week. You can even say, a fourth time that this has been retested there. So, why not? We know which level confirms. I mean, any break above 79. Okay, let's say for confirmation, any break above 79.60, 79.60 cents, will confirm that something bigger is brewing here, and a bigger rebound to at least come back at the, I would say, to these highs here at 86.50 cents is very likely. So bottom line, you have two options here, in my opinion. Option number one, hope that we're getting there and short, because why not? I mean, it has held 4 times. Why not hold the 5th? And regardless, you have a very tight risk, so it's worth a shot.
You're lagging again, Steve.
Yeah, someone thinks they know what the reason is here in our room.
Option number 2, be even more patient. What is the reason?
He's saying you will find that you have some platforms open and mouse movement drops your mic.
First of all, it's not my mic, because I did, since we're talking about that, I did extensive
it drops your mic. It drops it. It's not saying it's
no,
your mic.
It definitely isn't my mic, and it doesn't drop me, because even while I'm lagging, the GoToWebinar platform registers my voice, because there is an indicator showing how your microphone.
Yeah, I see it. Right.
Yeah. So that's not the case.
Weird.
And just to tell you, I know that it's annoying. Yesterday, I actually initiated a webinar for 1.5 hours after our webinar hours. I actually had a meeting with Velu. We did that meeting in the GoToWebinar platform. I actually did multiple tests. I mean, we were for 1.5 hours there. I was sharing my screen, and I was actually sharing a video because it takes a lot more bandwidth. At the same time, we were having a meeting and we were using GoToWebinar. I was running stress tests on my internet line multiple times. I was even running stress tests on my computer, which is anyhow very strong. I mean, I have 32 gigs of RAM. I have a very fast processor, etc. So that's not the case. And in no occasion, he lost my sound. So I'm really at a loss here. I mean, I don't know what else to try, because even when I'm using GoToWebinar off the webinar, no matter what I do, my voice never goes out. So I have no idea what else to test. I have no idea what else to test. This started happening a couple of weeks.
We'll figure it out eventually.
Yeah, this started a couple of weeks ago, and I can't even think of something that changed back then. I can't think of something that changed. So I'm really at a loss. I don't have any more ideas.
I just want to let Mark Yusko know that I see you, Mark, and we'll get going in about 6 minutes. Okay,
actually,
go ahead.
If he's ready, we don't have any more questions that we didn't cover, and nothing is moving in the market. So why don't you take the opportunity and start the interview? I mean, Mark is, such an interesting guy. He has so many things to talk about. I would really have 5 more minutes.
Give me a minute, and I'll get going. Let me just get set up here. So
Absolutely.
I'll be back in a minute.
Absolutely.
Actually, you know what? While Dale is doing that, I could make a very quick comment about the Fed. And two things. One, I know Blake talked about this morning about in the beginning of the webinar about the inflation picking up, and and Dale I think said that as well, that it's being reported that materials are going higher and all that. Obviously, we have to remember the headline inflation number, which I think we can all agree is not representative of real inflation. That's still quite low. It's still 1.4%, I think, or 1.4, 1.5. So it's still below target, and it will eventually start creeping higher. Not least because the dollar has depreciated over the last 6 months, but also because there are overall inflation pressures higher. But we have to remember that this headline number is not moving as quickly as other items of inflation which are not included in this number, like education, health. We've said this many times. So you have to remember that. And the other thing which I was looking at this morning was what's the market pricing for May, June, and the rest of the year. So it's pricing pretty much nothing for today, but we're pricing nearly a full hike for June, and then one more for this year, and a little bit more. So we're actually 3 and a bit hikes for this year, which I think is on balance, if you ask me, I think there's more chance of the market being disappointed. I think it's more likely they're going to do 3 than 4. So, or maybe even less than 3. You never know how things turn around. They can turn around quite quickly. So, just something to remember about what the market's pricing in right now, and it's pricing 3 and a bit for this year. Just to keep in the back of our minds.
Thank you, Stella. And where the S&P is priced is going to have a lot to do with what they do, in my opinion. So thank you, Stella. Thank you, Steve. Mark, welcome back to FACE. I'm going to make you the presenter. So you should be able to
enjoy the interview.
Thank you, Steve. Should be able, I'm looking forward to hearing your voice, and you should be able to share your screen as well.
All right. Can you hear me now?
I hear you, Mark.
Commercial.
I hear you, Mark, and I see your screen. You're on the GoToWebinar.
Yep. Excellent.
Welcome back to FACE, Mark.
No, great to be with you guys. How's everything going?
Yeah, great that you came back. Your reputation precedes you in here, Mark. In fact, before you came here, one of my associates said that Mark was adamant with heavy conviction at the beginning of 2017 that the King Dollar was going to be, there was going to be a palace coup, it would be dethroned, and that was a great call. Dollar broke 14%, euro went from 103 to 125, and just want to acknowledge that you're a great call in the dollar, because Mark, a lot of people were looking for higher dollar because of higher yields, and you nailed it.
Oh, absolutely. Absolutely. So, I appreciate that very much, and we can actually start there. It's interesting how suddenly everybody's jumped on the dollar bull wagon because we've had a couple of weeks of up move, and what I find interesting is if you back up over any meaningful period. Let's see if I can do that. If you back up over a longer period, I still think we're in a serious downtrend, and I really do think King Dollar has been dethroned. There's a lot of excitement about this recent bounce off 89. What I found most interesting about it is it bounced almost exactly off the Gann turn date. I mean, it was within a day or two. The yen was exactly on the Gann date.
When was that date, Mark? When was that date? In February?
March 23rd.
Okay.
March 23rd.
All right. So you do some Gann stuff too. Interesting for a guy who heads an investment RIA to do Gann, and a lot of people have a hard time wrapping their head around it. So you're a believer that time is more important than price, like Gann?
Well, I'm a believer that markets are made up of human beings, and human beings act cyclically, and we are impacted by, all kinds of factors, and one of them being a lunar cycle. And people say that's ridiculous, and I have personal life experience. I worked in an emergency department in college thinking I was going to be a doctor. We had 10 times as many visitors on full moons as regular periods. And, you know,
I'm with you.
Plenty of people. I know plenty of people who can't sleep during full moon periods. So it just it makes
people
some
have even called me people have even called me a lunatic, Mark.
There
so
you go. There you go.
I,
like it.
I believe in those cycles. So all right, so here we are, dollar making new recovery highs here. Within the basket of the Dixie, the euro is the most heavily weighted in the Dixie. So are you looking for buying opportunities in the euro or cable? Do you have a preferred fiat that you'd like to be long?
You know, I do worry about this chart. See if it'll pull up. I do worry about this chart on the euro. You know, that is a significant move back down to the 200-day average. And while it is, you know, wildly oversold here, if it were to not hold that 200-day, I could see some serious challenge there. My biggest challenge with the euro, and you know, you can really see it this year, is there are a lot of people, mostly living in Germany and some in France, that really, really, really want a weak euro. And that's why they created the euro in the first place. It's why they invited all the crappy countries into the euro. So, and you know, that big move from 104 up to 124, that's causing a lot of stress, and you can see it in sales, machine tool sales. You're seeing it in exports. You're seeing it in overall growth, and now you're seeing it in inflation numbers coming in very light in Europe. So deflation's back. You know, Draghi's having to make noises about not tapering, which I think is causing some stress on the euro. So I am watching that one closely. And you know, I'm not.
Go ahead, Mark.
No, I'm not against this idea that we could have a meaningful correction. You know, dollar up, euro down, yen down between now and summertime. So I think that definitely could happen.
Okay, well, you know, even 117 would only be about a 50% correction of the advance from last year. So maybe there is another shoe to drop in the euro around 117. In that case, because of what you're talking about the euro, would you prefer maybe longs in cable that doesn't have the same impact, although they're facing the Brexit?
You know, I am less sanguine about the pound. I just, you know, I think they've totally botched this Brexit issue. In fact, I still think that there's a chance that this whole thing comes off the rails and they end up with a Remain or Bremain, I guess. But we'll see. So I guess I would stick with the big three: the euro, the yen, and the dollar for right now.
Okay. I know that you're very positive with the emerging economies in Asia. Could there be something to do in the yuan? And yuan has been kind of tracking gold pretty good lately. A lot of people use the U.S. dollar yen correlation for the precious metals. And I forgot who I interviewed who said it's really, I think it was the Spiral Calendar guy. And he was talking about how the yuan is really a tight correlation with gold now.
Yeah, look, I agree with that wholeheartedly, and I'm actually a pretty big believer that the Chinese are playing a different game than the rest of us. Yeah, I tweet about this all the time, that, you know, hashtag China playing Go. You know, they're playing this amazing board game, and the rest of us are arguing about how to set up a checkerboard. And they're just so many steps ahead of us. They plan for the long term. They think in 30-year increments, and you know, they realize, they realize that, you know, strong economy, strong currency go hand in hand. And you know, people were calling for the renminbi a year ago to devalue and crash. And there were a lot of famous hedge fund managers and others who were betting pretty heavily that the renminbi would crash, and we just didn't see it that way. So I'm a fan of the renminbi long term. I think they are moving toward becoming, they've already become a world reserve currency. I think they will become ultimately the world reserve currency, unless it's out, beat out by Bitcoin, which I think could happen. And we're not talking 2 months or 2 years, but over a period of the next decade, I think big changes are in store in the Forex markets.
Do you think that this trade war is going to happen? And if it does, what do you think the impact's going to be?
Look, again, I think we are 2 moves behind China. Everybody says, oh, look what Trump's done. It's like, no, Trump doesn't do anything. He blusters and then he reacts. And China,
you mean 30 years? The Chinese think 30 years and Trump thinks 30 minutes or 30 seconds?
I'm not even thinking 30 minutes. I've seen him change his mind in the middle of a speech. In the middle of a speech, I've seen him change his mind. I mean, it's okay. Truly dazzling. So I just think that they are doing things that are, again, 1-2 steps ahead. Whether it's, they shut down excess capacity in aluminum and steel a year and a half ago. That's what drove this reaction of the tariffs on aluminum and steel. It wasn't us trying to trigger a trade war. It was us realizing our guys were getting their, booties kicked because of, the price changes being really moved by the Chinese decisions on spare capacity and fighting pollution and all the things that they're doing, which I think are really, really smart. And again, are part of this 30-year plan that they're looking at. It's one of the reasons I pulled up this chart on A shares. I just don't really understand this move, in that I get the fact that people say, oh, well, if stocks sell off, and U.S. stocks have sold off this year a little bit, if stocks sell off, and they sold off a lot, obviously, since the January 26th high, which again was right on the Bradley turn date. So, I watch Gann and I watch Bradley, different theories and different theses, but I mean, literally on the Bradley turn date, the whole market sentiment changed and sector movement changed, trend changed. So if you look at that and you look at this chart and you say, well, okay, if the U.S. sneezes, China catches a cold, I don't buy it at all. What people are missing about China, particularly A shares, is as of June, MSCI has included A shares in their indices for the first time ever. And every portfolio manager in the world, particularly index fund managers, are going to be forced to buy A shares. So I think this move down is really foolish. And I think there's a huge buying opportunity in Chinese A shares.
Okay, so maybe we go to WTI, since we're talking China and them now having an exchange that oil is traded in yuan. What do you think the impact is going to be? Is it going to also be part of the long-term bear case in the dollar as they challenge
Absolutely.
Our petrodollar currency status? Okay.
Yep. I mean, that's absolutely my thesis, and Luke Groman and I share that. And we spent 5 hours talking about this on another podcast in December, and I really do think that the long-term kind of reserve currency status, and look, this all goes back to 1971. We closed the gold window. We wanted to issue more fiat. Basically, it's a way to extract wealth from the masses and push it up into the wealthy and the government officials. And the only way to do that is to have something that backs your currency. So we cut a deal with Saudi. We went on the oil standard, and ever since, as long as global oil transactions were priced in dollars, we would defend Saudi Arabia's interest in the Middle East. Now, what's interesting is anyone who threatened that has disappeared, literally, which is frightening to me.
Right, because
Gaddafi
of Iran.
said he was gonna.
Right.
Oh yeah.
So I know where you're going. You're going to
gold.
Iran now. Right. Okay.
Yeah,
go ahead.
exactly. I mean, sir,
Right.
first it was Libya and Gaddafi, and he wanted to price in gold. Well, actually, first it was Iraq and Hussein, and then Gaddafi, and now you got Iran talking about it. And anyone who threatens we have to do something, except if you threaten Russia and China are threatening, because they're now going to price oil transactions in renminbi, but we can't attack them because they have nukes. So anyone who doesn't have a nuke who threatens dollar hegemony is in big trouble. So I do think things are getting dicey, and this Cold War could turn to a hot war. I hope it doesn't, but I do think geopolitical risk is real. And so while I look at this WTI chart, and we said kind of coming into the year, well, if you back it up to beginning of last year, we thought that oil would be very tough in the first half of the year. We thought it would hit as low as 40. It got down to 42, and then it turned on a dime, again, exactly on the Gann turn date, June 22nd, exactly to the day. It turned and has gone straight up since June 22nd. You can see that on the chart.
Yeah.
And then coming into this year, we said, well, January is usually a turn time, or June, so there was a risk that it could turn down, but we thought that the supply demand still looks pretty good, and that we'd probably stay in this mid 60s and could even hit 70. We didn't quite hit 70, but we came awfully close a couple times. And then we think the second half of the year, U.S. production is going to surprise to the upside, and that's going to cause some stress. So we actually think there could be lower prices ahead. But if there's a geopolitical event, clearly oil prices look higher. I mean, I look at this chart, and again, I'm not a super technician, but I look at that little shooting star on April 29th or whatever it was.
You're one heck of a technician, Mark. Don't sell yourself short. I mean, you're talking about Gann days, you're talking about Bradley days, and now you're talking shooting stars. So far from an amateur.
Well, I've learned a lot from people like you and others that I pay attention to, so I appreciate it. But I do worry that this market looks kind of heavy to me. It looks overbought. But I said, yeah. Well, actually, I look at all three of these things. I look at relative strength turning down. I look at the MACD turning down. I look at, actually, this is looking like a short to me. Now, the more that I stare at it here.
Well, maybe we get that break before there's a geo event. And anyway, I look at your 200-day, I'd have a bushel basket there at about $57 if that happened.
Exactly. No, I agree with that. And the thing that I think is interesting, just to pull it up for a second, this is an interesting trade in that, Saudi Arabia, best performing stock market. Actually, maybe it's second behind Colombia, but one of the top two performing stock markets in the world this year. Everybody had left it for dead. Nobody really understands it. They are, I think, going to get included in the MSCI indices, and it would be a meaningful percentage of the EM index. So while this thing has basically traded with oil and does look, again, pretty heavy with even a bigger shooting star, I do think this could be a great long-term play should they actually get inclusion. So I do think there's some interesting stuff going on
Interesting. So maybe a break in this index and crude would be a long-term buying opportunity.
Exactly. Yeah, the other one, I don't know if you've been talking about this much, is the ags.
I love trading the ags. I'm from the generation when our war chant, Mark, was beans in the teens, and it finally did it.
Love it.
Go ahead.
Love it.
Go ahead.
No, I love it. So I was at a roundtable discussion that Raoul Paul put on last week, and it was great. And they had a couple guys from Goldman who specialize in commodities, and they were talking that of all the commodities they see, the ags are looking the most washed out, the most likely to bounce. In fact, the one guy was saying that he's never seen sugar this low, although I'm not a big fan of ingesting sugar since I'm finding out all the bad things it does to us. But
well, he must be a young guy, because I can remember 2 cents. But go ahead.
Oh wow, he is a young guy. You know what? You're right. He is a young guy. Of course, everybody's young now. I mean, there's only a few of us old guys left. So I do like the way the ags bounced here. I really like the fact that they just surged right through the 200-day. And while it's not a perfect, this friend of mine taught me all about the 3 white soldiers, although I guess it's politically incorrect to use white and black now, but those are the colors on my screen. But the 3 white soldiers, it kind of almost had one, although it's not quite. That middle one wasn't quite a soldier, but that looks like a pretty strong move. Yeah, maybe it's overbought a little bit, but I do think that we've had 3 back-to-back perfect weather years that resulted in perfect, record crops, and that seems to be changing. I guess there's been a lot of rain problems in South America. That's potentially good for beans. Back to your, I don't think we'll get beans in the teens, but certainly we could get beans that are higher than where they are. And corn, I think, could be interesting. So I don't know. I'm not a big ag player, but I just thought that was interesting that multiple people were talking about it.
Well, going along with your thesis on grains here, Mark, your favorite chess master player, China, just like Joseph in the Old Testament, has been stockpiling wheat aggressively for years. They've been stockpiling wheat. So there's another signal about China looking more than 30 minutes, 30 days ahead of time. So they smell it.
One of the risks that they have, and it's, again, this is where I think I'm glad I don't have to make
social unrest.
Decisions. Well, not social unrest, but again, back to the hot war. Somebody was saying, hey, if Trump and the administration really want to get aggressive with China, it's really simple. You just cut off shipments of soybeans to China, because there's no country on earth that can produce enough to make up the difference. And that just sounds like a really bad idea. Starving a population to make a couple of people that sell airplanes and steel happy because they paid a lot of lobbying fees, just seems like a bad trade. So I hope that doesn't happen. But I do think the ags are looking interesting, and the fertilizer companies are looking interesting. And but my favorite topic these days is Bitcoin, and I've been talking a lot about it. I think it is the future of money and value, and I think we're just in the early innings of what's going to happen to how we think about currency and trade and exchange of value. And so I could talk about this all afternoon.
Okay, good. I want to talk about this, Mark. So I remember towards the end of the year when the CME, or one of the futures exchanges, finally launched a futures contract. I was tweeting, and you and I had a little debate. I said, I know there are a lot of Chicago guys salivating to short this stuff. And and you were a little counter to it, but it ended up marking a high for a pretty good correction down. Well,
no, you actually did me a big favor, because I was of the belief that cash settled futures wouldn't have as big an impact on Bitcoin as it does on gold. Gold prices, I do believe, have been, manipulated, for lack of a better term, for a long time, and it's because they're not cash settled futures. And so now when you look at the futures volume in Bitcoin, I don't believe it's enough to cause the fall. But I did tweet on December 18th saying that look, and you can see the big move in November, December above the 200 and above the 50 to that peak, and we just had a blow off move. And the value of the network at that point we thought was somewhere around $10,000 per coin, getting close to 20. I think we actually did hit 20 for about 4 seconds. Was just too much, and I hate to keep coming back to it, but it's amazing. We came right to the GAN day, and I said, look, the GAN date is on the 22nd. The futures start trading on the 18th. I would be nervous here, and I would get out, and I would wait till the end of the first quarter when we know that there's going to be a correction. It could be big, and there's a lot of weak hands that got in the last month. They will all sell. And I even a couple weeks later said it could get as bad as 10,000 and that was when things were like 16, 17,000. Didn't think it would go all the way to 6,000. Did not think that would happen. But there we were. And I do think that custody is on the verge of being solved. That's going to bring the Great Wall of Money to tie China and Bitcoin together. Because people forget that most of Bitcoin trading is not in the U.S. It's actually outside the U.S. It's in Korea, it's in Japan, it's in China, it's in Eastern Europe, it's in other places where, I would say, and you're up in the part of the world that I like to come up to in Chicago and South Bend, and I say, Americans are like Notre Dame football fans, right? They remember a past that never was. And, Notre Dame football fans, myself included, think that we win the championship every year. We haven't won since '88, but in the 40s, man, we were really, really good. And that's what we all remember. And Americans are the same way. We think, everything happens here. All the smart people are here. All the, activity is here. All the great companies are here. Well, it's just not true. And the activity of Bitcoin in particular is much more important in countries where the kleptocracy is even worse than here, right? You think about places like Venezuela or places like Nigeria or Zimbabwe, where the currencies are just, they can get so out of control that if you don't have a real store of value that you can protect and hide, you're out of luck. So
they're also unbanked, right, Mark? A lot of these countries.
Oh, that's a huge. I mean, half the world is unbanked, so it's huge. And half the world's unbanked, and they all have cell phones. Not all, but the majority of people in the world have cell phones. And I say all the gold in the world fits in 2 Olympic-sized swimming pools and is really heavy and hard to transport. All the Bitcoin in the world fits on my cell phone. Now, I don't have all of it in the world, but all of it could fit on my cell phone, and I can take it across border. I can take it anywhere. And I read a great line the other day: is how crazy must it be driving banks that we can store money in our head now instead of in the bank?
Yeah. So you actually have like a Bitcoin wallet, and you own it that way. I know a lot of people don't do any transactions except in Bitcoin. So do you do many transactions in Bitcoin?
I'm a hodler, right? I'm a hodler today. I hold on for dear life. I don't want to have happen to me what happened to the poor pizza guy. In 2010, the guy bought 3 pizzas for 10,000 Bitcoin, and those 10,000 Bitcoin today would buy 3 G5s. What I think is interesting about that is if you had taken that $40 and put it in the bank in terms of just cash, it'd be worth $32 today after inflation.
Great point.
So which one actually is a better store of value? Well, clearly I'll argue that Bitcoin is. And so,
is this your preferred trading vehicle for it, Mark? This GBTC?
Look, I showed this only because, it's the only thing that's liquid. And I think Barry Silbert's done a great service to everybody to bring this out and make it available to the average person. The challenge is you're paying $1.60 or $1.70, for every dollar of Bitcoin. So if that premium were to ever collapse, you could have a meaningful loss for doing nothing. But the premium has been pretty consistent over time because of supply-demand issues. And if people don't want to hassle with a wallet, and don't want to hassle with cold storage, and don't want to hassle with remembering their private keys, then this isn't a bad way to do it. I wish the premium were smaller, but I think over time that will happen. But I do think it has traded with a pretty high correlation to Bitcoin itself, and so I think it's not bad.
Okay, so perhaps a time will come to Bitcoin, and I was wondering what you thought about this, Mark, because you talk about the portability, anonymity, and everything, hold on for dear life, cross borders. Do you think it's possible that governments are letting this experiment happen so that people become accustomed to cryptocurrencies? And, there's been a war on cash. In India, Modi made illegal higher denominated rupees. Could it be that governments will have their own cryptocurrency, so there won't be any black markets, any cash market, and they'll know every transaction you do?
Really important point. And again, don't mean this with any disrespect, but a government can't have a crypto. A government can have a digital currency, but they cannot have a cryptocurrency. And I'm being very deliberate here, because what makes a cryptocurrency is it is decentralized. There is no central bank. There is no government. And I believe every government is going to have a digital currency. Absolutely. And really, we have 93–94% of that
already.
today, right?
Yeah.
Most of our quote unquote dollars are digital. You know, I barely know what paper money looks like anymore. In fact, someone asked me, you know, did I have any the other day, because they wouldn't take a credit card and they wouldn't let me use my Apple Pay. And I said, I actually don't. And she literally said, all right, here, I'll just give you the cup of coffee for free, because it's our fault for not being able to process digital. So crazy that we're already there. But the difference is, I agree with you that it is a war on the black market, right? There's still $2 trillion in the U.S. economy that is black money, counterfeit money and fraud and illegal and illicit activities. And if you got rid of cash, you basically bring all that back into the real economy. You can tax it. You can track people's behavior. So I do think they're all going that way. But the difference is, a centralized digital currency has all the same problems of fiat. You can create as much of it as you want. You can devalue it, so it's not worth anything. Whereas a true decentralized, limited supply currency like Bitcoin actually has this wonderful store of value proposition. People say, oh, well, they could change that. Consensus could change it. I'm like, well, sure, it's certainly possible, but consensus is a lot different than a single centralized body. So I feel better about the consensus doing the right thing and following, the original white paper than I do, some central banker deciding that, hey, I make all my friends rich and they're the ones that got me this position, so I really owe them. And, I don't know.
So it's really a democratized currency if it's going to take a consensus of holders to make that decision.
It is true democratization of currency. It's well said. It's global democratization. It erases borders. And look, it makes you think differently about how you view money. I mean, what is money? People say, oh, Bitcoin has no inherent value. Really? Like green paper has inherent value? It says "in God we trust" on the back of it, nothing else, right? It doesn't have gold behind it, doesn't have silver behind it, it has full faith and credit of the government. Well, really, does it? I mean, if you turn it into the government, do they have to give you anything for it? Not really. It is a medium of exchange because people trust it. And then on top of it, we need, if I want to give you money right now and you want to put it in your bank, we need a third party trust institution to validate the transaction. If I want to transfer you Bitcoin, it's on the ledger. We don't need a bank anymore. That's why all the people hate it.
Oh, yeah. Okay, so Bitcoin's a gold standard of cryptocurrencies. Are there any other cryptocurrencies that you think people should be paying attention to and possibly own? Yeah. Okay.
Yeah, I use the Saudi analogy that gold is the king, Ethereum is the crown prince, and then there's a bunch of other princes that hate each other, and most of them are probably going to go away. And that's Monero and Zcash and Dash, which are more privacy coins or transaction coins. Bitcoin right now is not very good at transactions. It's really better for a store of value. It's essentially digital gold. Ethereum is really about smart contracts, things like derivative transactions. And then if you think about Zcash and Monero, they really are privacy coins. Dash is actually pretty good at transactions. There are a couple others, Neo, but that's Chinese based, so people are afraid of it. EOS is doing some interesting things. There are a handful of other protocols that can be interesting, but the real problem is that everybody uses the wrong terminology. They say, there's 1,700 cryptos. No, there's not. There's 1,700 or 1,690, other tokens, utility tokens But
Right.
utility tokens are very different than cryptocurrencies. Utility tokens either give you access to a network, they reward you for participating in a network, they let you exchange points in a system or be part of a social network exchange. But they're tokens, right? They're a right to something. They actually don't give you ownership of a business. That's a security token. Security tokens, there are very few of those. Those are actually securities. They need to be registered. Any of those that were security tokens that were issued as ICOs violated securities law, and they're probably going to get taken down by the SEC, which is justified.
Right.
But I think security tokens is going to be bigger than all this stuff. When we start taking, I still call it the Sears Tower because I'm old, but the Willis Tower, when we securitize that, what person in China who's trying to diversify their global portfolio wouldn't want to own a little piece of the Willis Tower or the Plaza Hotel in New York or the Empire State Building? I mean, you can tokenize real assets in a way that takes them out of being illiquid, makes them tradable 24/7 global. I said we're just getting started, and this is an evolution and a revolution. The scale and scope we've just never seen, because we've never had a situation where we're basically taking all these independent monetary systems, and suddenly we bring them all together on a global scale. And it's not going to happen tomorrow, but it's going to happen. That's very cool.
I'm converted, Mark. Hallelujah. I'm going to learn about crypto. Really, outstanding presentation. You're a great spokesperson for Bitcoin and what's going on here. I mean, I interviewed some other guys with crypto fame like Tone Vase, and your presentation definitely really opened my eyes to some facts, not just
awesome.
Yeah, so why don't we do something boring and wrap it with the S&Ps? And do you think we're going to take out the Feb low before we see a new high, or could we see a new high?
This is my favorite chart. I call this the world's greatest indicator. And there's a guy, I think his last name's Carlucci, that originally invented this, and I found it on Doug Short's website, 10 years ago or something. And what I love about it is it's so simple, and it's basically OEX A200R. It's the percentage of stocks in the S&P 100 above their 200-day moving average, and it's a very simple rule. When this is above 65, you should be fully invested. When it goes below 65, you should go to 50% cash, and when it goes below 50, you should be 100% cash. And so. And
right there.
Then there's three other pieces of it, right? There's the RSI. So when the RSI is below 50, that's bad. When the MACD black is below red, that's bad. And when the slow stochastic, the black below red is bad. So all three of the secondary indicators are negative. So that would say that the market is untradeable. And then we're right on the border between 50% cash and 100% cash. And people say, oh, it's a lagging indicator. I'm like, well, yeah, it is, except what it does is it gets you out of the way of the big ugly move. And so I don't know if we're on the verge of the crash. A year ago in January 17, I wrote this big thing about welcome to Hooverville, and I compared Trump to Hoover, and I thought that we were going to 2,800 by September, and then we were going to have a 1929 like crash. Well, we only got to 2650 by September, and we didn't crash. And then they passed this stupid Tax Reform Act, and people got all excited, even though I don't think they should, because it's just accounting, and there's no real substance behind it, and companies are just going to buy back stock and not increase productive capacity. But so I said in November, I think maybe we're gonna go on a little longer. And I could even believe Jeremy Grantham's view that, look, if we were going to get a super bubble like 2000, we could go all the way to 3,400. And I don't think we need to go to the 2000 level. I always say that saying that stocks are cheap because they're less expensive than 2000 is like getting pulled over because you're swerving late at night and telling the cop, well, I'm not nearly as drunk as the guy in the back seat passed out. Someone had to drive. Like, no, you could have called a Lyft. So We hit 28.72 January 26th. Gann turn date the next day. I'm sorry, the Bradley turn date the next day. We've been heading down ever since. The greatest indicator got us into cash first week of February. I think cash is king here. I just don't think the risk reward of U.S. equities is very good. I don't necessarily think we have to have a crash, but I do think we could have a very similar event to kind of 2000, 2001, 2002, where we wake up 3 years from now and we're down, 40+%. And everyone says, well, what happened? How did that happen? Well, It's because it turns out that, recession's probably coming. If you look at Gann again, he predicted, I love it. In 1909, he predicted that we would have a recession and a downturn in 2019. Pretty amazing, because we're on track for both of those things.
Yeah.
So,
you just take yesterday's market action. It's so disjointed. You had NASDAQ steady all day with the Dow down 300 and the S&Ps and the Russell fighting their way back. And it's almost hard to hold.
That's the first day of the month. That happens every first day of the month, right?
Yeah.
If you look at every day since January 26th, 2/3 of them, almost 3/4 of them are distribution days. Okay. The dumb money comes in 9:30 to 10, buys the open no matter what it does, and then the last half hour, the smart money is selling the close. Almost every day. There are a couple short squeeze days on big news. And the thing people forget is a bull market is a market that goes up most days and goes down a lot on bad news or perceived bad news. Okay. A bear market is a market that goes down most days, but goes up a lot on good news or perceived good news. That's where we are today. Since January 26th, we've gone down more days than up.
Right.
And when we go up, there are these big spiky moves on something like, we're not going to war with North Korea, or, Russia sanctions. People want to perceive good news. And I just think we're in this corrective phase. Earnings are, we had our last gasp of greatness with this stupid accounting changes for the tax law. And I think that's as good as it gets. And, when we roll around 4 quarters from now and we have to comp to this quarter, look out below. So I think it's slow and steady here. Be cautious, be careful. I think the risks of a melt up in the S&P are very remote. And I think the risks of a true meltdown like 29 crash are not that high.
Okay, thank you, Mark. What is hard, is not easy to beat, is an interview with you. What a great interview. I really appreciate your time. My Trading Warrior brother. Perhaps we could get back together maybe another couple months and see what unfolds.
All right. We'll talk to you again soon. Thanks, Dale.
Thank you so much, Mark Yusko at Morgan Creek Capital and at Mark Yusko. Thank you, everybody. I'll see everyone tomorrow. Adios. Have a good Fed day. And remember, don't just count your pips, count your blessings.